Hi, I'm Quantitative, and today I'll give you tips on how to manage money as a techie. It is no secret that engineers and tech people generally make way more than average, but that doesn't mean that we should throw away money. A well-educated person should always have a long-term plan. I would like to start by saying that this is not a general investment advice, but rather a summary of what I have done successfully to preserve and grow my wealth, while keeping my strategy simple. I will also mention things that I failed to do so you can learn from them. My wealth distribution as a software engineer. Let me start by giving you the chart on how I allocate my wealth. I keep to a straightforward formula of dividing my wealth into three roughly equal parts between real estate, index funds, and bonds. I keep a decent amount of liquidity in case of emergencies. Since funds can take up to 2 weeks to liquidate, it is important to have some cash in hand. I will expand on this three-legged investment strategy point by point in the next section. I kept to this simple and diversified investment strategy for a long time now, and here how it has been doing. The return on my real estate investments was about 200%. This is based on the approximate sales value of adjacent and identical estates, and it's a rough estimate. I will explain why it grew so much in a moment. MSCI World Index fund prices doubled in the last 10 years. I only got about 60% return on my investments since I was late in getting into the index funds. I also started allocating some of my money for JPMorgan US Technology Fund, and it grew about 450% in the last 10 years, which I missed. I will discuss why I made this change later. The return on my JPMorgan Global Bond Fund was modest 13% in the last 6 years. My bond investments had minimal return, but the other two had an amazing run. This is not all luck though. These are the results of very conscious choices that I made while deciding on what to do with my money. I'll also talk more about it in a moment. If you are looking for professional investment advice, a lot of banks would be more than happy to help you. However, remember that banks are just like in other businesses. They will prioritize their interests above yours. So do your own research before making final decisions. Why I invest as I do. I'm not a finance guy, so I do not keep daily track of the markets. Due to this, I like keeping my investment strategy as simple as possible. Do you remember the KISS principle? Keep it simple, stupid, from software design? This is a great place to apply it in real life. Just as in engineering, more complexity makes anything more error-prone. I also aim for a diversified portfolio to decrease my volatility. I do not want to be thinking about my investments on a daily basis. Rather, I want to concentrate on being productive. Having a safe, well-diversified portfolio ensures that I can keep my mind clear of finance news and focus on my projects instead. Primary objectives while managing money. Your primary objective is to preserve your wealth, and diversification is the key to this. Quoting from Investopedia: diversification is a risk management strategy that maximizes a wide variety of investments within a portfolio. A diversified portfolio contains a mix of distinct assets and investment vehicles in an attempt at limiting exposure to any single asset or risk. Also, keep it simple. The time you spend on managing your investments is also a cost. In fact, if you're a high earner like an engineer, the time you spend on managing the money will be the highest cost of it. On the bright side, it is a good learning experience. However, try to avoid wasting time checking charts, but rather concentrate on learning the basics of economy and executing a good long-term strategy. As a rule of thumb, never ever go into day trading. If you do not know what day trading is, let it stay that way. Trying to outtrade bots will always lose you money. Give the video a thumbs up if you enjoy videos that steer away from the daily tech topics from time to time. Based on the feedback, I'll do more of these in the future. Real estate. What is real estate? Quoting from Investopedia: Real estate is property made up of land and the buildings on it, as well as the natural resources of that land, including water, minerals, etc. As a tech person concentrating on your career, you do not want to buy land and be bothered building your own place. Instead, buy a safe and modern apartment or a house that will not create any problems for you. Also, in engineering and tech, mobility is king. I personally like a place that is a bit outside of the city, which tends to be cheaper and easier to sell. If you get a better opportunity in another city or a country, you can sell your place in no time and move on. At the end of the day, good business is where you find it. In addition, when you buy a place that is in a growing area rather than the heart of the city, your real estate valuation will grow with that area. This is precisely why my real estate doubled in price in about 5 years. New projects around the estate kept popping up, making the area increasingly valuable and desirable. Do not forget that real estate is not risk-free. It is a physical and destructible object, so get whatever insurance you can. Also, when the markets crash, the real estate markets also get hit hard. So make sure you limit your exposure by not buying more than what you need. However, real estate is also a good way of preserving value, and you will always need a place to live in. Living in your own estate is a joy and gives you a peace of mind, which is worth the effort you put in finding the right place. Here is the Maslow's hierarchy of needs. At the core of everything, you need a safe and secure place to be productive, especially as an entrepreneur and a creative person. Living in a great home will pay off in the long run. Index funds. Index funds are my preferred type of investment in stocks. Partially quoting from Investopedia. An index fund is a type of mutual fund with a portfolio constructed to track a financial market index. For instance, the entirety of Nasdaq. An index mutual fund provides broad market exposure and low operating expenses. Warren Buffett has recommended index funds as a haven for retirement savings. Rather than picking out individual stocks for investment, he said it makes more sense for an average investor to buy all of S&P 500 companies at the low cost an index fund offers. The most significant advantage of an index fund is the ease of mind. You do not have to think about the performance of a single company or an individual stock. Markets tend to move up over time since stocks pay dividends, so your investment in index funds will grow along with the markets. Also, index funds tend to have very low management fee. For instance, MSCI World Index fund that I invested in has a 0.2% management fee per year. As a result, you will lose little of your investment to management costs, as there is very little to manage. Recently, I've started allocating more of my investments into technology index funds. As I already work in technology and believe in the future of tech, it's a good investment for me. However, I missed out on the meteoric rise of the tech sector in the last 10 years. If I were to invest in JPMorgan US Tech fund early on, which invests in big tech companies like Google, Apple, Amazon, etc., I would have had 450% return on my investment. But do not forget, stocks in any form are high-risk investments. In my opinion, you should plan not to sell for at least a decade if you plan on investing in stock-based funds. On a side note, I should note that you can choose to invest in real estate funds rather than directly investing in real estates. However, always check out the management fees, as they might erase your earnings in the long run. Before you buy any fund, go to the bank's website and read the fund's brochures. They will give you valuable data like historical performance, yearly costs, current holdings, and more. Bonds. Bonds are the final piece of the puzzle. Again, quoting from Investopedia. A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. Bonds are issued by companies and governments to finance their projects and operations. Owners of bonds are debt holders or creditors of the issuer. Bonds are low risk, low return investments and are a good way of preserving value rather than making money. The best thing about them is the ease of mind. They do not fluctuate much and you do not have to think about them after investing in them. One thing to note is the fact that the currencies themselves fluctuate. For this reason, it is safest to choose a bond fund that has a mix of holdings in major currencies like USD, Euro, and Yen. Another risk is the corporate bankruptcies. You might mitigate that if you invest in funds that hold mostly government funds. Again, if you choose to go with funds, choose the ones with the lowest possible management fees. Bonds are already low-yield investments, and the high investment fields will result in negative returns. You could buy treasury bonds directly, but that requires an investment account, which I do not want to bother with. Overall, this is the bulk of my investment strategy. You are free to experiment and learn and make up your own mind, and you should do so. If you have anything to contribute, let me know in the comment section down below, so I can mention those points in the article version of this video. Cash and other liquidity. This part is easy. Always have enough cash in hand for emergencies. Not only in your bank account, but also physically, because you might lose access to your bank accounts at any moment due to a variety of reasons. Others. There are many more investment instruments, like commodities, etc., outside of what we discussed. But as I do not understand them, I never get involved with them. Also, I do not want to introduce any complexity into my investment strategy. I am also not getting into retirement funds, as they change wildly from country to country and from employer to employer. But you should investigate them as your longest term investments. Now, what about my failures? I did not start investing in the stock market early on, so I could not ride the last economic boom, especially the tech boom. Instead, I opted to pay back my mortgage as soon as possible. In my defense, I did not know that interest rates would stay low for so long. I always planned for the worst case scenario and prioritized being debt-free. Secondly, I invested in bonds heavily, but did not diversify to multiple currencies, which resulted in large fluctuations. They stabilized eventually, but it takes a bit of your cognitive capacity, and you do not want to be bothered with that. You would instead concentrate on your projects and your career, which is what makes you money in the first place. Failure is a prerequisite of success, and I had many of both. Sub if you want to see more of my success and failures. Conclusion. Before anything, invest in what you know the best, which is yourself. Invest in your education, invest in your career, invest in your productivity, creativity, in anything that makes you a better person. Also, invest in your side and main projects. However, be aware that failure is always an option, so be rather conservative. You cannot succeed without failures. Same goes for your investments. You might win or lose some money. In the aftermath, always reflect on your mistakes and do your research to be more conscious about your next decisions. Money spent on what makes you productive is money well spent. Do not shy away from spending on your productivity tools, like a good laptop, a suitable standing desk, etc. Quality tools always pay off. After going all this trouble trying to preserve your wealth, one thing you should never do is to throw your money away with useless expenses. Not to mention the fact that showing off with your wealth is a childish thing. You never know if your current level of income will be sustainable forever. Tomorrow, you might need everything you have. Live a frugal life, and you will not regret it. That is it for this video, and I'll see you next time. Live long and prosper.